Hello, it's Thursday, May 17th, 2007. This is Brian Shannon speaking from Alpha Trends. The market has closed, and we had losses in the major indices today. The Qs traded down 22 cents, or just about a 0.5%. But again, looking at the daily time frame, zero damage done to the overall trend. We've still got a rising 10, 20, and 50-day moving average, so we want to give the benefit of the doubt to the buyers in here. And it looks like this 20-day moving average continues to act as support. And actually, it looks like we're finding a little resistance at that 10-day moving average. So kind of coiling between the 10 and 20-day moving average. I don't really think it means much of anything other than we continue to be in a little range of about 45.75 on the support side, up to about $47 up as a level of resistance here recently. Breaking beyond that range, then we can start looking for new highs once again. But right now, it just seems as though we're going through a little bit of a consolidation through time. And on the 10-minute time frame, we started to see the buyers coming back into control yesterday, but I noted that the 5-day moving average was still heading lower. Now it's a flat. That moving average is flattened out. It looks like it's going to need to get above $46.60 for the buyers to really be considered in control of the short-term trend here. Until it can get above, what did I just say, 46.60, $46.55 to 60 cents, somewhere around there. If it can get above there, then I think the buyers are back in control, and we'll see another test of that $47 level. And breaking past there, obviously, is going to lead to new highs once again. But for now, I think the prudent course of action continues to be just to take it kind of slow. I still believe that you're best off with pretty short-term trades in this environment right now. And the market just needs to digest some of the big gains that it's had over the last couple of months here since bottoming out in early March. So the S&P 500 was down as well. It was down 17 cents. This market did make it out to new highs. I don't know what happened there, but this market did make it out to new highs. And if we look at it, the 10-minute time frame, you can see here's the old intraday high. And today we did probe up through that level. But really, what kept me from taking any long position in the spider or the ES was the fact that the advanced decline was weak pretty much all day. It closed at 1261 up to 2013 stocks down, and that was pretty much the way it went all day. So I didn't see the broad participation in the market, and that's kind of what kept me on the sidelines as far as willing to commit to the aggressively to the long side. And like they say, when in doubt, sit it out, and that's exactly the position that I was taking there, rather than trying to force a trade. And when it comes down to a market environment like this, it's easy to try and force something. It's easy to look at the market and say, well, the advanced decline line isn't participating, therefore I should sell short. Well, if you sold short, once again, you're fighting the primary trend, and that primary trend has done nothing but damage to short accounts over the last several months in here, except if you're a very short-term trader. And looking at the 10-minute time frame, what it looks like now is it looks like we have a breakout, but for now it looks like that breakout failed. So we're going to have to see a clear move above 152, I think, before the buyers really get confident in here. I think we're due for a little bit more consolidation, but we've got a rising 5-day moving average, so I just don't think the odds are there. Tomorrow's options expiration day, typically a day where volatility is pretty low. I'm going to say that if you've got something better to do tomorrow, that's probably a good idea, rather than try and sit here and look for trades that just don't seem to be that obvious, at least not to me right now. The semiconductors did lose 40 cents. Yesterday I said that the primary trend on the daily time frame is still in a very nice uptrend, and I still believe that. However, the short-term trend is lower. We've still got this little pattern of lower highs and lower lows, so there's no reason to get involved long side or really short, because you're fighting that big trend, and it's that is on the daily time frame. You're fighting this larger trend. On the 10-minute time frame, we had identified support at about $37 a share. That level was tested and held for now. So until we see this pattern of lower highs and lower lows turn around, I don't think there's any advantage to getting long in the semiconductors. And on the daily time frame, I don't think there's any advantage at all to selling short or looking for downside exposure in a market that's already been down pretty good over the last 3-4 days. So I'd say wait in here for this 5-day moving average to flatten out, the market to get back above that, and it just looks like there's no reason right now to be involved in the semiconductors. The IWM Russell 2000 did close below $81 a share, and that's the level we've been watching for a while. But I really don't think you can take that number so literally. This has been the weaker market because we had that 10-day moving average cross down through the 20-day moving average, indicating we've got a mixed trend here on a daily time frame. If you look at the short-term trend, being the 10-day moving average, that trend is lower. If you look at the intermediate term trend, is the 20-day moving average, that trend is basically flat to a little bit lower. But the larger trend, on the daily time frame, the 50-day moving average, does remain higher and is advancing. So we've got a mixed bag in here, and I continue to believe that we're just undergoing some consolidation. The buyers really need to push this thing back above 83, 83 and a quarter for them to really fully be back in control of the trend here. And for now, it just looks like sideways trading in the IWM. Perhaps we're setting up for a slower summer. We'll see, but the overall trend of the major indices is still higher. It looks like we're just getting a little bit of consolidation right now.